you have to understand the implications of this sideways consolidation. So as long as we continue to hold this lower band right here, all right, now I still remember a week ago we popped above it and we closed above it, and everyone was like, oh, here we go, Gareth was wrong, it's going to break out, blah, 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 blah. And then what happens? They get the good old-fashioned rug pull, right? So that's what happens. That's the inevitability. Is you have to understand the confirmation signal about how key it is. You must confirm a breakout to be a breakout, just like you must confirm a breakdown to be a real breakdown. I can't tell you how many institutions sit there waiting for you to jump the gun and go long thinking something's a breakout, only to pull the rug out from under you.
Since June, the price of Bitcoin has fluctuated in a very small range. The coin hasn't responded to the recent big news in this time frame in any significant way. As an illustration, the SEC claimed that Ripple Labs had broken American law when it raised funds in 2013, causing the cryptocurrency to first soar to a high of $31,842, following the completion of the Ripple versus SEC case in the US. Although the judge decided that XRP was not a financial security, despite finding that Ripple had broken the law, this was seen favorably by most cryptocurrencies. The recent week's economic statistics have also had a minor impact on Bitcoin. In June, the American economy only added 209,000 jobs, less than the 230,000 predicted, according to data released earlier this month. Inflation in the headline and core decreased to 3% and 4.8%, respectively, according to fresh statistics. Retail sales in the nation decreased in June, while manufacturing and industrial production both decreased further, according to figures released on Tuesday. The housing market began, according to data. Building permits and house starts declined in June after climbing the previous month, signaling a cooling in the economy. Because of the MIG economic data, the Federal Reserve has only a limited amount of room to raise interest rates. According to economists, the Fed will raise rates by 0.25% next week before pausing. The breakout of the Bitcoin consolidation has taken longer than anticipated, according to Gareth Soloway, and it now has two possible directions to go, up or down. Now let's see Gareth provide his thoughts on the recent price movement of Bitcoin.
What did we see? We saw Bitcoin reversing here, and we have now retested this low. Now, the impressive, there's positives and negatives here on the chart. The positive is we're still inside of this band, right? We're still inside of this realm. The positive is also the last 2 days we've been piercing this lower band of 30,000, and they've rescued the market. They've rescued. You've had buyers come in and keep price right around that 30,000 daily close, give or take by a little bit. Today, we're up just fractionally on the Bitcoin price. All right, so again, those are some positives. The negatives are this. Look at how long we've been going sideways. Yes, this is known in technical analysis as bullish consolidation, but really bullish consolidation should break out by now. All right, you should have had a breakout. Doesn't mean it can't, but probabilities begin to shift, right? We start to say, okay, it hasn't been able to. Think about this. There's the old analogy, and I love this analogy. This is an analogy I use about resistance or support. Think about yourself. You're outside of your house. There's a fire in your house. You have your cat or your dog in there. You need to break it down, right? So you ram against that level. That's resistance. You're ramming your shoulder into it. You hit it once, it probably doesn't break down. You hit it twice, it maybe doesn't break down. By the third or the fourth point, the door gives way. Okay, that's the thought process. So if we look at Bitcoin, you hit it here, you hit it here. You even kind of got halfway in and it still didn't give way. And so what happens is, let's say there's that fire and there's that cat or that dog inside that you want to save, and you get to a point where you ram the door 50 times and it still doesn't break. What are you going to do? Well, you're going to figure out another way. You're going to maybe go around to a window. You're going to go around to the back door. You're going to leave this area and move away. And that's the thought process where if you can't break out after a certain amount of time, the path of least resistance is to, in this case, the downside. All right. So again, to summarize, Bitcoin's still within this range. But again, if we confirm below this level, You're now headed to 28,500 or so, this pivot. And if you break through that, let's talk about where we're headed. This is my target. Okay, target is 26,900, basically around 27,000. Amazing trend line. Now, I want to be clear on this. As long as this trend line holds, this one here, this white one, then Bitcoin can be bought on pullbacks. Okay, why? Well, very simply, this is an upsloping trend line connecting all the pivot lows together. That means it is an uptrend. The trend is still up. If you break this line and you start trading down in this range, the trend is not up anymore. It has failed. And now you have to think you're probably headed back. First support would be 25,000, then potentially 20,000. And eventually, if you keep breaking these pivot lows, you're going back to that 15,700 level. All right, so again, that's your summary. Now on the upside, let's just say Bitcoin eventually breaks out, which again, I'm a long-term bull, so eventually I do think Bitcoin breaks out. My upside is very simple to calculate here. You take this pivot from 2019, you stretch it right through here. This is my ultimate kind of, 6 to 12 month upside target. You could see that's a beautiful trend line through these lows right through here. And that's around 45,000. So again, if you're able to break above this level, this 31,000 and confirm, then you're headed to about 45,000. There is resistance around 35 that you'll have to monitor, but I still think, again, the momentum probably carries us up to about 45,000.
The Nasdaq has increased 34.4% this year to levels last seen in early April 2022, propelled by an unstoppable rally in large-cap growth stocks like Nvidia and Meta. Optimism about the potential of artificial intelligence, a stronger-than-expected U.S. economy, and expectations that the Federal Reserve's aggressive rate hike cycle is coming to an end. Gareth continues by mentioning the second cryptocurrency Ether, the S&P 500, and the Fed's tax revenue, all of which show that the current trend is consistent with an impending recession. Let's return to the video now.
Ethereum again, this is the beauty of it. Look at this little channel right in here. If this breaks, we head down to this level around $1,730, $1,740. If this area breaks, we're probably headed to this pivot high right up here at around 2,130. Now, one thing I want to say is, this is the beauty of it, guys. Everyone, when I go on interviews, they always ask me, well, what's your big play here? What's your thought process? What's your max downside? And my max downside still is 12,000 on Bitcoin with worst case scenario of 9,000. Now, 9,000 would be achieved only if you see a stock market collapse, because it would be a liquidity draining panic scenario, right? So people would run away from risk assets and Bitcoin would have probably a downside move sub 10,000. All right. But the bottom line again is that when you're looking at these charts, I'm in here trading long and short multiple times. Like we were short Ethereum already and we banked, and Ethereum went back up and we went short right here again, and now we're in the money. The S&P goes to the all-time highs. It's possible. I'm still a skeptic until it happens. I'm a technician, so just by default, I look at all the resistance levels that it has to get through first to get there. I look at the RSIs, I look at how extended things are. But again, the way this market has been advancing since this low in March. Now, by the way, what happened in March that kind of shifted things? I'm going to tell you. The banking crisis. We saw Silicon Valley Bank fail. We saw a bunch of these other banks panic. And what's fascinating about this is that basically the Federal Reserve and the government guaranteed deposits. That was the kicker here. So now all of a sudden, even though all of these banks are holding all this dead weight paper, they're underwater hundreds of billions of dollars, there's no risk to the consumer. The consumer can have as much money as they want at a bank, and virtually there's no risk of them losing their deposits. And that marked the change in character. If you look at where this market began this big uptrend, now you had uptrends prior, but they had big pullbacks, right? This is the uptrend here that hasn't had a big pullback, and it coexists with the Federal Reserve getting involved, basically giving the banks lots of potential liquidity so that they are made full, and there we have it. All right, so again, very interesting to see that. Now, if we go to the QQQ, Fascinating chart here. We are right at the upper end. Declining government tax revenue is important is because we're not in periods like we were in 2010 or 1980 or 2000 when we had scenarios where the government didn't have as much debt, right? Right now, we are at $32 trillion in debt for this country, and interest rates have just gone up exponentially from basically 0 to 5.25%. And so now you have $800 billion a year right now, and that's going to go up every single year, at least right now, $800 billion that are going to be influencing how much money we're paying in interest. $800 billion in interest alone. Yet we see government tax revenue falling off a cliff, okay?
Please share your responses in the comments box below, and don't forget to like, subscribe, and enable alerts. Thank you for watching.